It is time to lock in, fellas. What's going on, guys? It's your boy, Jordan Cameron, back with another update today. Well, guys, we're seeing it. We are seeing the breakdown over here on the stablecoin dominance charts, which we will talk about in today's video, and why that gets us excited and why that, I think, pushes us even closer to this big explosive move over here on the total market cap chart, which we are looking for, which is the most explosive move up that we've ever seen for the total cryptocurrency market cap. And it all comes down to a bunch of different reasons, including global liquidity absolutely skyrocketing, our stablecoin dominance chart finally breaking this 4 or 5 month trend line to the downside, and Bitcoin over here holding our 50 moving average band, which we've been discussing in countless videos over the course of the last 2 or 3 months, keeping our cool and not getting too overly dramatic with all the news about tariffs, Trump, good news, crypto news, not pushing up price. What the heck is going on? So let's talk about it, guys. Let's talk about it. So, as always, just to kind of continue to, put out my thesis and my hypothesis out there before we jump on into, a little bit more of the maybe short to medium term here. One of the great things happening in the short to medium term, just for anyone that's new to the channel here, my base case over the course of the next year or so is we're about to see the most explosive move that we've ever seen for crypto as far as market cap, maybe not percentage wise, up to our 4236 extension, which is that 10 trillion point for total market cap, before we will see almost a .com bubble like crash, very similar to what we saw in the .com era, back in 2000, 2001. Before, only the strong projects survive into 2026 and 2027, where we see the strong projects have their real true bull runs for the crypto markets, similar to, the tech stocks as Amazon, Google, the winners of the tech stocks. Anyways, besides that point, and why we expect this and why we're sort of thinking about this as our base case on this channel, continues to be the aspect of, not flipping bearish unless Bitcoin gets a weekly close below the 50 moving average band. And you've heard me talk about this countless times in probably the last, 10 to 20 videos that we made on this channel, guys, that unless Bitcoin closes below the weekly moving average band, the 50 moving average band, we have to remain bulls. We cannot flip bearish at the 50 moving average band because of bearish news, right? And we've talked about this consistently since, really the beginning of February, when Bitcoin broke that 89K support. We said, okay, that's fine. We probably come back down to the 50 moving average band, but we will not flip bearish unless Bitcoin has a weekly close below, because we said many times in this bull market, guys, if you flipped bearish at the 50 moving average band, like over here twice in 2023, or like right here in 2024, you were simply wrong, and you were on the side of being bearish at the low point and being bearish at the support point for Bitcoin. So here we are again, just to illustrate where we are. We've had Bitcoin for the past, 2-3 months here, sitting on top of the 50 moving average band, forming a double bottom with bullish divergences. And now we're seeing Bitcoin bounce and almost back up to about 90,000 today. So we are seeing Bitcoin bounce off the 50 moving average band as expected. We said as long as Bitcoin holds above there, we remain bulls. Now that's the first step of this. As long as Bitcoin holds above the 50 moving average band, we remain bulls. If it breaks below, historically that has meant that we are going into some type of deeper bear market. It's time to be a bear, at least for the next 1 to 2 years. But we're above, it's time to be a bull, okay? Now, as we kind of go along with this, all right, and this is all going to tie together, if we expect Bitcoin to bounce and potentially make new highs, right, then we're expecting total market cap to come up and make new highs. Now, why up to that 10 trillion point? What's so special about that number? Well, a couple different things. Right? We can take a look at our Fibonacci's. If we take our 2017 high to our 2021 low, our 2018 low, right? We went up to that 4236 Fibonacci level in the previous bull market, right up to that 2.95 trillion was our exact top of the 2021 bull market. Now, if we take that same 4236 Fibonacci from our current bull market high to our previous bear market low, right? That gets us right up to that 10 0.5 trillion point, that psychological 10 trillion point, where I believe that, everyone, your mother, your grandpa, your uncle, your cousin, your weird neighbor down the street who picks his nose and flicks it onto walls, right? We'll say that crypto will change the world, right? XRP is going to be the world reserve currency. Chainlink will tokenize everything. And though I believe some of these things may actually play out in the future, that's going to get everyone sucked in, right? Right on the top of this bearish formation, which is a rising wedge, okay? And why that 10 trillion point is so particular as well is if we actually take the 2017 high and we connect both the 2021 highs, that gets us conveniently right at that 10 trillion 4236 Fibonacci as well, okay? And add them to the point of, also the 4-year cycles, us having, approximately still about 6, 7, 8, can't do math here, 8 to 9 months left in this year. The 4-year cycle, which actually makes sense of actually getting that final blow off top up to that 10 trillion points before a massive rug pull. So this is why this is kind of our base case, right? Get everyone sucked in, get everyone, thinks it's over, even though we're still above the 2021 all-time highs. Get everyone sucked in, get everyone to believe, and that's when you get the real rug pull of the dot-com bubble 2.0. And it's, not very fun times in the crypto market. But let's jump on into a couple short-term things. Why do we think this move is starting soon, right? Because, we've been chopping, we've been talking about, as long as stablecoin dominance stays above this trend line, we could probably expect Bitcoin and altcoins to just continue to chop around, go sideways, do absolutely nothing. But we've had a little bit of something happen over the course of this weekend and this Monday, guys. And you will notice what has happened is we've seen stablecoin dominance confirm with a daily closure below this trend line. And that's been my signal to say this move, I'm a little bit more confident in this move starting right now, okay? I'm a little bit more confident in this bigger move up for the total cryptocurrency market cap to that 10 trillion point right here starting because crypto does the inverse relationship of the stablecoin dominance. So we're seeing stablecoin dominance now break this trend line. The last time we had one of these trend lines and we broke it down over here in October, November, December, January, that's when we saw the likes of XRP, HBAR, Chainlink, Cardano, CRV, all these coins pull 4, 5, 6, 7, 10x's from their lows. And once again, we are seeing stablecoin dominance break to the downside. Now, why is this important? Well, with my thesis of total market cap going up to that 10 trillion point, we'd have to expect the inverse relationship over here to happen on the stablecoin dominance chart. So my thinking is, and we've had this, 8 to 9% level marked off on the stablecoin dominance chart, simply because we've seen resistance on it over here in 2021, 2022, 2024, and 2024 again. And we were expecting this to be resistance again. And this range, right, between about 9% and 4 or 5%, to just be one big Wyckoff accumulation for the stablecoin dominance chart, right? Which ultimately will be this final down move on stablecoin dominance will be the inverse relationship of total market cap going up to this 10 trillion point. And then finally, this finding a low somewhere down here, forming that triple bottom, okay? That is the Wyckoff accumulation structure. If you guys know the Wyckoff accumulation structure, where we get this big move up on stablecoin dominance, which is ultimately what will lead to the dot-com bubble 2.0 dump like this, okay? The inverse relationship of that. So that's still the thought process, and why I'm a little bit more excited now in the short term is we are seeing this finally break to the downside. That was my signal to get a little bit more excited. Until we broke that to the downside, I'm like, okay, Bitcoin continued to chop, market can continue to be boring, and it could continue to be boring for a little bit. Maybe this actually comes up and retests, right? And we see Bitcoin go back down to the low 80Ks again. Who the frick knows? But this has been my signal to be now paying a little bit more attention here in the short term, and to be expecting some bigger moves here in within the next few weeks. I think it's pretty likely at this point. So what I'm expecting now is stablecoin dominance, though it may come up and retest first, to now come down and form this new low over the course of the next few months to the end of the year, okay? And ultimately that will lead to this total market cap chart coming up to this 10 trillion point or somewhere close to the top of this wedge over the course of the next few months. Now, this is great and all, right? This is great, right? you may be looking at this and saying, okay, we're looking at charts, we're looking at, potential resistance points on stablecoin dominance, we're looking at potential support points on Bitcoin. We get the inverse correlation. That's great. But you may be looking at this and saying, okay, but that's great. What about the macro, right? Does the macro support this move? Because, the normal investor will come on here and say, okay, the charts, great, astrology for men, stuff like that. And you'll have the economists come in and argue why something like this is not possible. And for those people, I always like to say, something like this, it never seems possible, in the time. And I like to go back to over here back in like 2020, when we had this move, when we had this massive crash over here in, during the COVID crash. This move did not seem possible during that time. Okay. Right. And what we've seen now is actually a much smaller move down here. And I bet now this move doesn't seem possible. Now, why do I think that's possible? Looking at the charts, we talked about the reasons on the charts. Bitcoin at the 50 moving average band, stablecoin dominance finally breaking to the downside, creating the Wyckoff accumulation, total market cap at this long-term trend line. But what does the macro support that, right? Do we have liquidity coming into markets to support a move for, crypto to go from, 2.7 trillion to 10 trillion, almost, a little bit less than a 4x on the total cryptocurrency market cap? Do we have the liquidity to do that? And I come over here, yeah, man, and this just fully supports my theory, guys. Look at global liquidity. Look at the amount of liquidity entering markets right now. It is absolutely insane, the amount of liquidity that's entering markets right now. And we know, and you guys have probably seen many, many videos from many, many different people. We've talked about global liquidity on this channel for a long time, but we know that Bitcoin lags the global liquidity, right? And look at this move on global liquidity. And just to kind of put this in perspective, guys, we saw a similar move here in the end of 2024 from global liquidity from here to here. And you saw what some stuff did, right? Bitcoin went from about 50K to about 110K, over a 2X, right? We saw, XRP do like a 10X. We saw HBAR do like a 10X. We saw Chainlink do like a 6X. We saw Cardano do like a 6X. We saw CRV do like a 10X. You saw insane moves on altcoins and Bitcoin when global liquidity did a similar move right now. And you guys can see just the absolute sheer move on global liquidity coming up right now. And we know that Bitcoin follows this with a lag. Okay. So for all the people out there, the macro guys and the guys who don't think like, a move like this is possible, just because of, the charts, even though we've talked about it many, many times. And, there's always a chance that it fails, guys. Nothing's guaranteed. And we'll talk about that towards the end of this video. But the global liquidity supports my theory of this final massive move up on Bitcoin, following global liquidity to the upside, which pushes total market cap to the upside, which drags the altcoins up, which sends the stablecoin dominance to the downside before a massive crash because of more liquidity entering markets when it probably shouldn't. As always, as history has taught us. So, to the macro guys out there, that's my message to you. There is a massive amount of liquidity entering markets right now, and that's even without the US Fed starting any type of QE or money printing or, just stopping QT. This is like other nations. So, once again, short term, we got stablecoin dominance finally breaking to the downside. We got Bitcoin just continuing to hold the 50 moving average bands. We remain a bull on this channel, and you do whatever you want to do until Bitcoin breaks the 50 moving average band, which we'll talk about right now, the potential downside, because we always want to talk about the potential downside. How is this invalidated? How is everything we're talking about on this channel, right? This move up on Bitcoin, this move up on total market cap, this move down on stablecoin dominance, following global liquidity. How is all this stuff invalidated? Well, it's so simple, guys. It's so simple. This is why I'm so chilling and chilling right now, because for me, it's just following how the previous cycles have played out. And as long as Bitcoin holds here, like it did here, like it did down here, like it did here, this is the time you want to be a bull. The closer you are to the 50 moving average band and you're above it, you want to be a bull. Because historically, you want to be a bull above the 50 moving average band. And as soon as you get any type of weekly closure below, that's the signal that crypto is going to be in a tough time for a few years, right? Back over here in January 2022, you got a weekly close below at about 45K. It didn't nail the exact top, but your weekly close below 45K, you came up, retested, it was over, right? Sideways for 2 years, it was over. Same thing over here. If we make this little circle bigger, May of 2018, you didn't nail the exact top. Weekly close below, came up and retested. It was over for a few years. 2018, 2019, 2020 were pretty, sideways, choppy years. So we can apply that same logic here and say, okay, here we are. Bitcoin 87K, weekly moving average band, now has moved up to the high 70K, 77, 78. As long as Bitcoin stays above there, we remain a bull. And we chill. And we do nothing in that time. Right? So that's what I'm doing, guys. And it just continued to be the same thing. And I think we're now getting super, super close to this move because I've been very hesitant to say this move is starting right now. I've just said have patience. But now that we've seen stablecoin dominance break to the downside, I am very, very interested in this move starting within the next few weeks. What I mean by this move is I mean an explosive move, not a little choppy move up. An explosive move to the upside. Now that we've seen stablecoin dominance break this trend line to the downside. I think we're about to see this start to trend down. Maybe it retests the trend line like it did here. But I think this is going to start trending down, back down to this really range lows. Stablecoin dominance is about to trend up. Okay. It's not going to be in a straight line. Just because this isn't a straight line doesn't mean it's going to be in a straight line. Global liquidity just keeps pumping. So a lot of good things going for us right now, guys. As long as we stay above the 50 moving average band, that's our bear invalidation, right? I will be the first one to come on here and say I was wrong to be bullish. I'm flipping into a bear. Have any break below the 50 moving average band on a weekly close. But for now, I am locked and loaded, and I am prepared to sell on everyone who has given up on crypto. The massive amount of bearish sentiment right now, I'm getting ready to sell on all the uncles and grandpas and daughters that will think crypto will change the world. They don't right now. You guys, does anyone think crypto will change the world right now? Absolutely not. But they will up here. That's how it is every cycle. At every top, people think crypto will change the world. And that's what I think is going to happen up here. And I will get ready to sell on all those people. If it comes. I will not be buying here. I will be selling here when most people will be buying before this move down. The dot-com bubble 2.0. All right. So that's your boy Jordan today, guys. If you enjoyed today's video, make sure you subscribe, man. We've been killing it. We're almost at 82,000 subscribers, man. You guys are absolutely killing it, dude. Yeah, absolutely killing it. You guys are crazy. Thank you for all the new viewers over here. Once again, we got our validation. We got our bull thesis. We explain the reasons why. We're not just out here winging it. We explain the reasons why on the charts. And we simply have patience until it plays out. All right. It's been your boy Jordan. I'll catch you guys in the next one. Later, my guys.